Welcome to the Black Phoenix Financial Podcast. Lee Kemp here for another week of financial learning. Here with the man with the silver hammer, it's Ethan Cope. How you doing, my friend?
How's it going, guys? Good to see you all.
We are out a day later this week because in the States, unbeknownst to me, it was this crazy tradition of Thanksgiving, so we put it on hold for a day, but we're here on Friday. I say, following last week's show, I've downloaded, and I'm going to check where they are, I've downloaded a few of the apps that you mentioned. Won't go into too much detail. People want to know about them. Go back, listen to last week's show. But I've got Yahoo Finance, which I quite like. I think that's my favourite, the bunch that you recommended. Seeking Alpha. And I've put on Stock Master as well, which you said you weren't too keen on, but you liked a couple of features. And it's right now it's overwhelming to me, but I quite like the look of it. But I'm going to presume because it gives you a lot of outcomes, like it says good and bad, I guess you more want to just know the data so you can make your own decision. Would I be right in guessing that?
Yeah, the biggest feature I like Stockmaster for is that you can set those custom alerts.
Yeah.
And it kind of, between that and the brokerage that you use, when you plan out ahead of time and you set these alerts and these little messages, they complement each other. And you can get a really good feel on what the market's doing, what your ticker that you're interested in is doing. And then for Stockmaster, I like the particular way that you can get a banner that comes down that tells you a special message. You get an email that comes down, tells you a special message. And then in addition to that, you can set that custom sound, so I could have like a regular alert when, say, the S&P 500 is hitting a certain level. And then for my ticker, when it hits a certain level, I might have a certain alert. And then when it gets to a level I'm really interested in, it's going to whistle at me.
To go then.
Like, hey, exactly. And maybe like even a special message like, hey, wake up, buddy, don't miss this, whatever I need. So that's why I like Stockmaster.
Really good. So again, I don't, I've started to just I've not got them all yet because I thought I'd download them, a few days apart so I can spend some time getting familiar looking at it. But it's definitely,
cool.
And I was excited because you talked about this before we even started about getting this going with the apps on your phone. And it's definitely helped me level up. I mean, so much so that we even exchanged a few messages in the week about different tickers and what they were doing. And normally it's you telling me, whereas actually I got to kind of drop a few bits into you this way, which was quite good as well. So definitely feeling
Excellent.
I'm slowly building in those puzzle pieces, which is good. But anyway, that was last week. What are we doing this week?
Well, this week we're going to actually go back from the real-time tickers and everything that we learned last week. And we're going to build on that by going back to the simulation aspect in chart game. We're going to evaluate chart game, and we're going to look at how peaks and valleys give us key levels of a chart pretty quickly. And so we're going to look at some charts and we're going to assess key levels and what that tells us about how the stock is performing and where it could be headed.
Looks good. Do you want me to load up here and we can dive into that?
Yeah, that sounds great.
Cool. Let's get a bit of chart game on the screen.
And in previous episodes, we had talked a lot about personality and how we can judge a baby from a teenager's behavior, and then the difference between a teenager's behavior and a Navy SEAL.
Yeah.
So what we're going to learn in this episode is actually going to be very highly complementary to what we learned about personalities in the past. And the way we're going to do that is we're going to look at the chart and how it's made up of full body candles. And then when you look at the chart, if you look at any specific candle, there's a fat part and then there's a real skinny part that goes up or down. And that, as we talked about before, that's the wick. And how that wick and body teach us things. So when we look at this chart right away, we see that 5770 is a key level, and then 5740 is a key level. And then right in the middle, you have a range right there at 5750. So as we're going forward and we're trying to gauge personality, those are the three most important levels on a chart: 5770, 5750, and 5740.
Cool. So that for you've got the 57, 70, and the 40. So that's effectively where is that where it tops out and bottoms out on the where it is?
Exactly.
And then the 50, is that a
Yeah.
mid-range? Is that where it is? Is that it going through the middle, or is that a bit more specific?
Yes, that's a great way to frame it right here. Yes, is that would be like the middle range. So what we learn when we identify charts is when the price action starts to operate outside of those predefined ranges. So we
Right.
just looked at the chart real quickly, and boom, like within 5 seconds, we're able to say 5770, 5750, 5740 are key levels right away. And then as we go forward, as we look to like place flags like we had in the past, we look for a difference or a change in any of those areas. So we're seeing,
this one gives us anything, but we'll move on through.
Right now we're seeing that it's still operating in that range. It is approaching that area. That's what it's called overhead resistance. So that key level right now, it just received quite a bit of action. It didn't follow through, but it tells us that all the market participants are thinking about reaching that level.
This is good. So you mentioned that before when we were talking for a previous chart, and you talked about the fact that it was thinking about breaking through, but it didn't. And I didn't really know what it meant. But when I was looking through some charts the other day and I showed you the ones where I did quite good on, that resonated with me. And I saw that in a chart and I didn't know why or what it meant, but it's one of the things that led me to it. So here we're up to 57.8 now. So is this it breaking through, or what's this showing you now?
Yes, it was actually a very clear or clearer sign when we assessed this and we identified that top level as 5770 and how it broke through that level or attempted to break through that level. And that gives us everything in trading is about information. There's it's more of a art than a science, because just because it attempted to break that level, as we see, doesn't mean that it would follow through.
Yeah.
So as we look for key levels and we plant flags, the more time it tries to break through a key level, the more information it gives us. Because say it's tried a level at 5770 once, it rejected it and it comes down.
And that's
and then
it's done
say
that.
half
So it's
hour.
gone up to 57.8 very slightly, and then it's settled back within the levels again. Is that
exactly? Yeah. So it gives us
yeah.
information. It says it's rejected that level or close to that level almost 3 times total, because we saw that that was an important level before. And the when that happens, it kind of encourages us or prompts us to say that that level might not get breached or might not even try to breach again, because it's seen that level so many times.
Yeah.
So the more times it provokes a level, it can either plant a really nice confident flag and breach that level immediately, or if it's approaching that level like a bunch of tired joggers in a marathon who just finished a race versus the starting gun, you know, when everyone starts a race. So there again, we're seeing that key level that we talked about at the bottom, where there was support, that it off that level and rejected it. So it basically is confirming when we're trying to establish personality and how key level complements personality.
Yeah.
This is operating inside a range. So what would you say the personality of this stock would be for a trade?
Does it fit into the whole teenage girl model? Because it doesn't appear, I know I might be wrong, it doesn't appear to be a seal because there's no growth. It's quite static. It's not babying either, but it's done it here, isn't it? It broke through once, but not really. I'm pointing my screen here like anyone can see. So 1, 2, 3, 4, 5, 6 maybe there. Attempts at the 57, but then dropped off and gone up and gone down. So it's erratic.
Yeah, that's what I would agree with your assessment. Either a teenager or no personality.
Yeah, that's true.
Because it's just going sideways.
Yeah.
So this is how we use those key levels. And now we've been watching this stock it's getting close to the end of the day, and it's looking at that key level again.
Yeah.
We could look at that and we could potentially build a little excitement because now it's 4 or 5 times it's tried.
Yeah, and it's
so we're
pushing
thinking
it again there a little bit, isn't it, near the end of the day? And I was going to ask you this, and this is off piece, and I know this might be for completely different shows, so tell me to shut up and rushing ahead. But do times of the day make a difference? I mean, do you get, because you've referenced a few times, there could be a frenzy at the start of the market, but do the rules kind of adjust a bit as you get towards the end of the day, for example?
Exactly. Yeah. The first hour of the day and the last hour of the day are actually the most interesting in terms of volume. The first hour is obviously, it's called the market open, and then the last hour is called power hour.
Right.
And the reason
that says it in the name, doesn't it?
Yeah. And the reason is because power hour is when everyone kind of collects their stock ideas together for that last hour of the day, and they think of what they could potentially hold to be profitable overnight. So that little flurry of buys and sells often happens in the last few minutes of the day.
And you can see exactly what you're saying there. Look, because it's had that last little push before the end of the day, so I don't know what's going to do in tomorrow, and it has the volume is just spikes there, isn't it, in that last little bit.
Exactly.
What would you do? Would this be one you'd steer clear of, or would you keep a bit of interest?
If I would have interest, it would just kind of be to dip my toe in. This isn't a place where you would put any amount of size, because what happens is that key level that everyone sees who's involved in that company, it's showing trepidation or unease at that level. Every time it goes there, it sells off, and then it buys a little more and sells off. But what we're looking for when we're looking at charts is we want to see that key level, and we want to see it get breached, like the joggers who hear that starting gun, and they're all off to the races, versus like what we saw there. That looks like a bunch of joggers who
quite comfortable with their pace.
Yeah, or they cross the finish line, they're like, we're done, So yeah, here we got a new chart, and we can look here to establish very similar key levels. It looks like your crosshair is at one of them already.
Yeah, I was going to say, so that's you got 27.25 on the bottom, is that right?
Yep.
And
what would you call the top one?
28.25.
Bingo.
There we go. And then your mid's there, so about 27.6 or something is your middle there. Is that right?
And so, yep, exactly. And how long did that take you?
Seconds.
Exactly. But that's key information. This is called technical analysis, and the real words for this are support and resistance.
Right.
So it gives us an idea of how to pick out personalities.
No, it's good. And the bit I like as well that just resonates to me personally and how my mind works is I like where you said it's more of an art than a science, because I like that. I like and I think we've read where you can feel your way through things, and there's no exact rule to it, but there's a framework you can kind of work within, and I like that, and I like how this fits in. It speaks to me.
Exactly. Yeah, it's a lot like maybe dealing with water. You know, you're gonna get some drips here and there. You get your hands wet, like we talked about surfing, where you have an ebb and flow.
Yes.
And then also, I think you mentioned it in a previous episode. It was like a way of falsifying a thesis.
That's it. Yeah. Falsification.
Yeah. Do you mind speaking to that real quick? How you falsify a thesis?
Yeah. So the premise of falsification, when you've got a theory you're looking at, is effectively it's true until you prove it's not. So you're constantly looking for ways to disprove your theory rather than constantly looking for ways to prove it. Like I think when I called it, to expand on it, it's called the black swan approach, I think, in that there's no such thing as a black swan until you see a black swan. So it's always open until you disprove it, rather than you get there and then you sit on it and you stick with it because you've proven yourself right. And I think that really applies to this, because you're just, like you say, constantly assessing, aren't you?
Yeah, I agree with that approach 100%. And the cool thing about the way that me and Lee are teaching you is that this approach will keep you safe 100% of the time. And like we just talked about with those key levels, is we see very quickly that 2820 and 2780 have not breached or even attempted to breach.
Not even close on this one. It's just sat right in the middle, isn't it?
So very quickly, whether our emotions want to get involved, whether this is a cool company, whether somebody says it's going up or it's going down, we look at this chart for ourselves and we assess there's nothing to it.
It's it. In fact, so much so, I think we skip out on this one because it is the boring man in the corner of a party with nothing to say.
There you go. Yep. Doesn't want to play our game.
Here we go. Let's give this a run through. So, see if we put it in place. So, 7.7 top, 7.4 bottom. So 7.5 in the middle.
Yep. Very good. And
7.5.5 in the middle, I mean.
The cool thing about what we're learning here, Lee, and my approach to the market is that it's so simple. You know, we're allowing the price action in the chart to dictate our trades. You know, we don't have to boil down earnings. We don't have to boil down, oh, this company had this great new contract, it should go up, or it's got guidance. Some of the really professional traders lately, right after Amazon had earnings, they expected it to do a certain thing because of guidance. But then when you look at the chart and you see that it's just going sideways, key levels have not been breached, it doesn't matter what anybody else is saying because there's no move to piggyback on.
Yeah.
So that's so cool about this chart, or any chart that we look at, is right away in those 3-4 seconds we assess the level.
Yeah.
We see that there's interest at that level. What I would do is take like a little bite, maybe very small size, and continue to add to it, and carefully take profits and add profits as it confirmed my theory.
No, which is good. And what I want to do here, especially for people that are watching and listening for the first time, is just show, because this is only our 10th one of doing this. So we've not been doing this very long at all. I came into this blind, and I'm going to throw out a few observations here just to recap all the things I've learned that I didn't know 10 weeks ago. And if you've not before, go back, watch or listen to the episodes. It won't take you long, and you can start building up that journey, because you've got here. So it's, to use the right terms, it's gapped up straight at the start. So a big jump there for the initial bit from opening.
Yep.
There's, as you talk, the end-to-end candles. In fact, we've got 4 in a row here where you've got green end-to-end candles, which again, as you said, is another strong sign. And from opening, you've got 1, 2, 3, 4, 5, 6. So that's six instances of buys against 2 of sells. So in my mind, all those indicators there, plus the fact with today's knowledge, where the top there was 7.7, it seems to have confidently broken through that. I guess the next hour or so will show. But all those signs are telling me, exactly like you've said there that you would, that I'd want to take a bit of interest in this one, because it's kind of hitting every positive indicator of all the things you've shown me so far. And again, all of those things, everyone listening, watching, I knew none of that 10 weeks ago. This is what Ethan's method can do. So let's keep ticking through that and see. Look at that. Another strong jump. We're tentatively, until we falsify it, Navy SEAling here a bit, do you think?
Yes, I agree. And what you look for, that right at the beginning when you said there was 4 or 5 green candles, there was one in particular. If you look, there was a small gap up,
Yeah.
a small red candle,
Yeah.
a indeterminate green candle, red candle, green candle, green candle, and then right after that, that one in particular,
Yeah.
there's a lot of space surrounding it. There's no wick on the bottom,
Yeah.
and there's a little bit more space between it and the last candle. So I plant a flag there, and
Yeah.
I say that's a pretty confident candle right there, at least temporarily. So what I'd look to see in the future is maybe an even bigger or double-sized candle, to give me even more insight. And like you said, it broke that 780 level, and it looks like it could be reaching for a higher price, much like a Navy SEAL personality would tell us. So this is how key levels give us a lot of real insight.
Yeah. And would you, as you go on, would you reassess those levels once it settles down again?
Absolutely. Absolutely. And if it tries to do the same thing at that same level with a similar amount of confidence, um, that gives you a lot more information, because now what's happened is time has elapsed, which means that the stock itself can gather buyers.
Yeah.
So the interest, people that other traders who are looking at their screen are now looking at the same ticker that you've looked at. So the level it couldn't breach before could potentially have more fuel the second time that it breaches it and or tries to breach it.
It's kind of almost, if you reassess, it's settling at a top end at 8 now, isn't it?
Yeah, yeah. And this is irritating for any trader because it gets to a point, it goes sideways, and these are the aspects, when you take a trade and you want to do very small size, when you're
Yeah.
not 100% sure it's doing something, either very, very small size or just stay away completely until it confirms something,
And
It's
it's doing
kind
it
of
here,
like,
isn't it? Like you said, it's now settled, going sideways, as you said, and it's just kind of just running along that 8 line now. So what was that momentum? It's slowed back into its steady pace again, isn't it? I see a lot. I was going to ask you as well
exactly.
with the levels, because I see a lot of people posting charts on social media. You send me some bits of it makes sense, and bits of it I'm still like, I've got no idea what that means. But I'll see where people have drawn lines across, and that's their levels, or their levels where they started to kind of, so it's like you said, to put those flags or something in. So where there's lines running across left to right, that's
Exactly.
people doing the levels, yeah?
Yeah, there's what's called overhead resistance.
Yeah.
There's resistance, which could be the middle level that we talked about, and then there's support. And support gives the idea that a price has hung out in a certain area for a certain amount of time, and most of the buyers associate that price with that company. And overhead resistance would be the maximum price that a company's been at, and most of the traders in that company don't expect or see that as a max price
Right.
for that particular company. And like we talked about with Snickers bars in the past, if a Snickers bar is 75 cents you know, and then the next day it goes down to 25 cents. You say to yourself, wow, that was a big change, but the Snicker bar still tastes the same, you know, or vice versa. Snickers bar is 75 cents and it's headed to 150. Tomorrow you say, hey, wait a second, there's a big change here. Why has the price doubled? Maybe this is something I want to get in on.
So that's done through there on that day. Again, it had that initial jump, smash through, and then it's kind of set its new level, eight and a fraction, and then it's kind of just stayed there all day. Which, again, correct me if I'm wrong, because I'm just going to keep trying applying this stuff. But I'd want to, if this was real world, I'd be very interested to watch this one again tomorrow with those new assessed levels and see if it's pushing again.
Yes, exactly. That's what I would do. I would be very careful getting in on something that wasn't confident. But what I would do is I would watch for it to display confidence.
Yeah.
I would patiently wait for that moment, you know, like we talked about. It shows interest in that level, but it's not ready yet. Well, could it be ready, like you said, tomorrow?
Very interesting. This, again, just building that puzzle. This is, really good to look at these in this way. And for me, and I don't know if people watching feel the same, if you feel the same, but the bit I've struggled with when I've started to look at some real charts recently with the apps and stuff is, so far I've been watching it live, so assessing as stuff happens rather than retrospectively. Whereas I think using the leveling, for me, this has made it easier to look at a chart over a day or a couple of days or a week and get a bit more assessment on what that means looking retrospectively.
Excellent.
So it's building something that was bugging me in my head.
Well, keep this frame right where it is, because I'm going to teach you something new here in how we've talked about the body of candles versus the wick.
Yeah.
If we look all the way in the beginning there's one red candle with a really long wick, and it sticks up like right above 8.
Yeah,
but
right
then
back
the
at
whole
the start
body
there.
of the candle comes all the way back down. Just give me one sec here. So what a wick tells us something different than the body does. It tells us that the majority of the buyers in that minute or that 5 minutes settled far below the price that it attempted to grab. So a wick tells us in the beginning that if a body later breaks the level where the wick painted a flag, it's more important. So when you see a full body later on where there was a wick flag planted, and that this chart shows us that perfectly, because the wick flag said that the new price could be around 8, but then it settled real quick and went back down. So then later on, as time elapsed, you see later at 8 that now that range actually became 8. It's now using the between 795 and 797 as the support. It's like it's grabbed for a little bit higher of a price, and it's stayed there.
Very interesting. So that first bit was almost like a premonition of where it could have gone, and then it's realised that a little bit, very quickly down the line.
Exactly. And if you reverse the chart, flip it upside down, wicks tell us the exact same thing about sellers. Because say you're worried about a stock selling off and it has a really hard wick to the bottom, and then a few hours later a body gets the point where the wick was, that almost certainly means it's going to break down.
Cool. So it's like the wick, if you've got the wick and then you've got the body, you can take more credibility in that second one because it's kind of it's tested the water already. Very interesting. I love this. Right.
So
There's been a... Oh, sorry. Go on.
I was just going to tell us. So we have the key levels in
Yeah.
today's episode, and then we have the wicks and candles. And the wicks and candles and key levels, honestly, they teach us so much about how to trade the stock. I mean, this is super, super valuable stuff. This is learning how to surf for sure.
No, really good stuff. There's a lot of ground covered there. I'm going to have to wrap us up in a second. We are motoring on with the time. I just want to make a quick mention though, because there's a couple of stocks you have been talking about the last few weeks. There was obviously Smile Direct Club, which came out of nowhere and has had a blistering couple of weeks. I think one of the days I saw once I actually got into it was like a 15% overall rise for the day, which is pretty damn fantastic.
I started calling it out in the 8s, I think. So that's nice, Feather.
Really good with that one. And is it Haynes Brands as well? Has had a few good days in there as well. So no, I definitely think, people out there, keep an eye on Ethan's Twitter. There's some great insight there, and it shows itself in how things perform. Again, he is at T4A Phoenix. Phoenix is PHENUX. We on the show, just a quick mention, be at BP Financial Pod. Give us a quick follow. I generally try and share all of Ethan's stuff on there as well. Appreciate all the support from everyone out there. Really well appreciated. I don't know if there's anything stock market wise you wanted to just shout out before we wrap up for this week.
Well, it's a weird market. We got Thanksgiving this week, and we have obviously the COVID and the vaccine news. The S&P 500 still managed to make brand new highs, which is pretty weird. But I'll stick with my Smile Direct Club and my Haynes brands on any pullback. I believe both of them is going to go higher. And then also NLS, which is the company, Nautilus, I think, is a company surrounding Bowflex and some of the other at-home gyms. So those are, any pullback on either of those three tickers are interest for me. So keep doing your homework, everyone, and excited to keep learning with you. These are fun things.
Excellent. We thank you so much for listening and watching. Hit subscribe, leave a comment, all that good stuff that gets the message out there. And we'll be back again next week with some more education. He's been Ethan Cope.
Yeah.
I've been Lee Kemp. We have been the Black Phoenix Financial Podcast.